What's going on YouTube? Walking Asset here, and in today's video I just want to go over my top 3 technical analysis indicators. Now before I start, it's important for you to understand what technical analysis is and what the indicators are. So tech analysis is basically looking at a stock's price movement history, and by understanding that history you can use tools called technical indicators that can help you determine further price movement and price action. Now, the point of this video is to introduce, my top 3 favorite tools, and if you use them right and understand them, then you too can profit by using them correctly in the market. So, without any further ado, let's get right into it. So the first one is called Relative Strength Index. Very important. It's called RSI for short. Now, over here, this is what it looks like. This is a graph of the Relative Strength Index. So this basically it measures the price momentum of the stock, and it can help you predict whether the price is about to go up or down. And it does this through these two metrics: overbought and being like oversold. So if a stock is oversold, that means that its RSI is below 30. Now, oversold means that there's been a huge sell off. So if like more people than normal sell, the stock's RSI falls below 30, and that usually is when true investors or like experienced people will buy, because after this sell off, a reversal occurs and it starts to climb again. So yeah, if the stock is oversold, then its RSI is below 30. Now, if the stock is overbought, that means that its RSI is above 30. So if a bunch of people are buying a stock, so let's say that this is like Tesla or like another hype stock, if it's being bought so much, it starts to become overbought, and that's signaled by the RSI being over 70. Now, when the RSI is 70, it's due for a pullback because it's overbought. And with the RSI, the price is always trying to revert back to the mean. So if it gets too high, it's going to try to move back to the middle or like go back down. So it's always fluctuating. So yeah, that's how the RSI works. So yeah, with this info, you can plan better entry and exit points in a trade. So let's say you were looking at a stock, just off the RSI alone, if you were long on a stock, you could buy in down here when the RSI is oversold and hold it for like 2-3 weeks or a month. And over time, the price will like gradually climb. So yeah, that's the purpose of using the RSI. So next we have the MACD line. Now, this may look confusing at first look, but I'll be doing like live examples on a chart just to make it more clear. So yeah, this is the MACD line. So what it does is it tells you if the price action for the stock is strong or weak. Now, by strong or weak, I mean, so like look at this like gap. Notice how it starts down here and it ends down here. That's a strong price movement upwards. Now, whereas this gap, this is more like consolidation. It's not moving up or down. It's like trying to determine if it wants to go up or down, and decided to go down. So yeah, the MACD is really good for helping you predict price reversals pretty early. And how it does that, so for bullish momentum, that's when the MACD line is above the signal line. That indicates a stock breakout. So in this example, the green line is the MACD line. Notice how it doesn't touch the signal line. So the signal line, like keep your eyes on this, is the black line, and the MACD line over here is green. So because the MACD line is green, it crossed above it. This is signifying bullish price momentum. So it's climbing all the way up. So if you were looking at the MACD middle of the day and you saw the gap between the green line and the black line, you you'd be able to come to a conclusion that the price action is pretty strong and bullish, and you'd be right because look at, it doesn't cross until it hits all the way up here. So when these lines get close and they're about to intersect, that's how you know that a reversal is about to occur. So, if you were trading and you were like watching this chart at the same time, like right up here when the MACD and the signal line are about to intersect, that's when it would be a good time to get out and close your position. So yeah, and then look what happens here. It crosses. So then in the second case, this is bearish momentum. That's when the MACD line is below the signal line. So it goes from being above it, it's below it right here. The MACD line is below it right here. So it went down a little bit, but then notice it crossed back above it, and you'd think that like it would continue to rise, but no, look, it sharply pulls down. So like these three dots indicate all the intersection points of the signal line and the MACD line. So notice that when the MACD line falls below the signal line, this is all bearish momentum downward. This is a sell-off, and the sell-off ends again when the MACD touches the signal line again, and then it's back above it. So yeah, and then like right here again, it just crosses below it. So yeah, that's how the MACD works. I love using the MACD. Very helpful price indicator. So lastly, we have the displaced moving average. This is what it looks like on a chart. Pretty simple. This indicator appears like on top of the candle, so it might be confusing, but it's not that bad. So this helps you track the direction of the trend and the reversals. It's similar to the RSI kinda, but so how it works is if the candlesticks, these red and green things, if the candlesticks are above the DMA, this indicates a bullish uptrend. So the purple line is the DMA. Notice how these candles are like all above it, so it's clearly like bullish. It's like climbing up. But then, like, notice right here, if the candlesticks fall below the DMA, this indicates a bearish downtrend. So it falls right below it, and the price falls down. So yeah, that's the DMA. So those are the three technical like indicators. Those are the top three ones that I use. If you want to learn more about these, definitely check out my investing guide for free. It's only $15, but if you just click the link in my bio, it's yours for free. And if you want a more advanced training, check out the stock market beginner bundle where you'll learn stocks and options. But moving on to live examples, let's take a look at these three indicators in action. Here we go. Okay. All right. So right here we're looking at Tesla. Chart looks a little messy, but that's beside the point. So take a look at the RSI. Notice how when it's red, that's signifying that it's overbought. And look what happens every time it's red. Every time it's red, it gets pulled back down. And same case over here for the blue line. So that's when it's oversold. Oversold. This is the RSI. So it's oversold when it falls below 30, and it's overbought when it climbs above 70. So like almost every time it's either overbought or oversold, you can not guarantee, but you can more than likely assume that it will revert back to the mean. And by that I mean it'll go from being extremely oversold to moderately, like, not overbought, but like bought. It's not just gonna crash down forever. And this is a pretty common pattern, like red, blue, 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 red. So like right here in this, right now, like it's Sunday, price is still headed up, but like look what happened last week. So it was oversold pretty bad, and then it climbed up over the past like 2 days, and then boom, pulls back down. So this pattern will just oscillate forever as long as the stock exists. So that's the RSI. Down here is MACD. Now the MACD line is blue right here, and the signal line is yellow. Notice how MACD line is above it. That's bullish momentum. MACD line falls below it, that's bearish momentum. These bars tells you the volume and strength of that price direction as well. So yeah, just focus on these candles right here. Notice, so we're looking at the chart right now. You got a bunch of green candles. Check out the RSI. It's completely red. That means that it's overbought. A correction occurred, which is why you have these candles. But then take a look at the MACD before. So, you know, it's crossing. It's flat right here. It's consolidating. Now it opens up wide. That's a bullish trend upwards. And then it gets corrected right here with this one red candle. Boom. And then boom. Boom. So huge sell-off right here with this MACD line. So yeah, that's the MACD. And then last but not least, we have the DMA, displaced moving average. This is right here in the candles. Notice how the candles are below it. So they rise up. And that signals the bullish momentum, because once they get right above it, you know, you see the price is up. But once that price reversal happens and it falls back below it, notice how the price drops back down again. So yeah, that's all for today. Kind of a long video, but if you learned something new, you know, like and subscribe. But I'm Walking Asset here, and I'm out. Peace.
Gonna just keep running away?